Hey guys, I wanted to make this video because there's been some people in the comment section asking for more information about CBDCs, and there's been some comments about people saying, well, isn't the dollar already digitized? Don't we already have one in reality? And the answer is no, because of some major concerns about the functionality of an actual CBDC. So I wanted to dive into this report done by the Cato Institute back in February of this year, where it goes over some of those concerns in a really well done way. I won't go over all of this report, and I encourage you to go through the entire thing because it's very important. The Cato research put out this report on the risks of CBDCs, why central bank digital currencies shouldn't be adopted. It's released in February of this year. What is a central bank digital currency? A central bank digital currency, or a CBDC, is a digital national currency. Like paper dollars, a CBDC is a liability of the Federal Reserve. They're in charge of it. But unlike paper dollars, it would offer neither the privacy protection nor the finality that cash provides. That direct digital liability, a sort of digital tether between citizens and the central bank, makes CBDCs a radical departure from the digital dollars that we experience today. So while a CBDC would not offer any unique benefits to Americans compared to existing technologies, it would pose serious risks. It could spell doom for what little financial privacy protections remain. We don't know who's using a $100 bill today, and we don't know who's using a $1,000 peso bill today. The difference with the CBDC is the central bank will have absolute control on the rules and regulations that will determine the use and expression of the central bank liability, and will have the technology to enforce that. And I'm kind of moving quickly here, so I may not quote every single word here. Put simply, a CBDC would most likely be the largest assault to financial privacy since the creation of the Bank Secrecy Act and the establishment of the third-party doctrine. The threat to freedom that a CBDC would pose is closely related to its threat to privacy. With so much data in hand, a CBDC would provide countless opportunities for the government to control citizens' financial activity. How might such financial control occur? Freezing or seizing assets. Governments have long recognized that freezing someone's financial resources is one of the most effective ways to lock them out of society. A CBDC could make the process easier and faster for governments by establishing a direct line between citizens and the government itself. Negative interest rates. While interest rates are typically thought of in terms of positive rates, a CBDC could allow policymakers to also set negative rates. In effect, a negative interest rate would result in people losing money. Proponents argue that this strategy could be implemented to spur spending. Programmable spending. The programmable capabilities of a CBDC could mean that people would be prohibited from buying certain goods or limited in how much they might be able to purchase. For example, they could try to curb drinking by limiting nightly alcohol purchases or prohibiting purchases for people with alcohol-related offenses. And this is outside of the report, but I've mentioned too in a previous video that they could say, well, because of your health issues, you're not able to order this or that food. You can't order that pizza, sorry. Let's get back to the report. A CBDC can allow government agencies and private sector players to program targeted policy functions. By programming a CBDC, remember this is a programmable thing, money can be precisely targeted for what people can own and what people can do. A CBDC can undermine both the foundation and the future of financial markets by reducing credit availability, disintermediating banks, and challenging the rise of cryptocurrency. A CBDC would be one of the tools to fight crypto. Another concern is the central storage of financial information. When an IRS breach puts all 331 million Americans at risk, a breach at a private financial institution would only affect a fraction of citizens, leaving customers at other banks free from harm. Everything will be centralized here. Consider a cyber attack on two different kinds of networks. The first one targets the Bitcoin network. Since the network is decentralized, it remains functional, even if one computer is compromised by a hack. I'd recommend that you read the rest of this report yourself. But basically, we can see summarized from this excellent report by the Cato Institute, there are major concerns about CBDCs, including privacy concerns and also vulnerabilities of our information being in one centralized location versus the way it is now. It is a programmable currency, which can lead to all sorts of controls. It's not just about being able to eliminate criminal activity. We're talking about ultimate control over your health decisions, over your food decisions, how much of something that you're buying. We're talking about ultimate tyranny when it comes to the capabilities and the technologies that government would have over you.